I think the bullion banks are concerned. They probably know something that we don't about that gold in Fort Knox, that it might have been leased to the Bank of England, and the Bank of England might have leased it many times over. Is it any wonder a lot of gold is going from London to the US? But there's also gold going from elsewhere to the US. So finally, the US administration is realizing that gold is really important and it's been flowing east for too long and we need to repatriate it. My speculation is that a lot of the gold, unfortunately, has gone offshore because in New York, the rehypothecation of the gold is not as extreme as in London. There's no limit in London. It's like the Wild West of bullion dealing.
President Donald Trump has ordered a full audit of the U.S. gold reserves at Fort Knox, which has reignited debates over the transparency of America's gold holdings and its role in the financial system. Addressing reporters aboard Air Force One, Trump stated, "We hope everything's fine with Fort Knox, but we're going to go to make sure the gold is there." The decision follows growing public interest in the issue, particularly after Elon Musk's recent comments on X, where he questioned whether the official gold reserves match the reported figures. Over the years, Fort Knox has been a subject of speculation due to its strict security measures and the fact that the last comprehensive audit was conducted in 1974. While the U.S. government maintains that the gold remains intact, the lack of recent verification has fueled skepticism. Market analysts suggest that the ongoing audit of U.S. gold reserves may be closely connected to broader discussions about monetary policy and gold's role in stabilizing the economy. Financial strategist Mario Innecco views this audit as a pivotal moment that could signal an inevitable reassessment of gold's position within the global financial system. If the gold reserves are confirmed and their value rises, it could lead to a significant shift, potentially adding nearly $1 trillion to the Treasury's balance sheet. This shift could provide much-needed relief in reducing national debt and addressing broader fiscal challenges. Fort Knox holds approximately 147.3 million troy ounces of gold, accounting for 59% of the Treasury's total gold holdings. However, the long gap since the last full audit has reignited calls for greater transparency and accountability in how the nation manages its precious metal reserves. However, any discrepancies or issues uncovered in the audit could have serious financial consequences. Missing gold, inconsistencies, or irregularities in accounting could undermine confidence in U.S. monetary policy, potentially triggering a loss of trust domestically and internationally. If it turns out that the United States, purportedly the world's largest holder of gold, doesn't have the gold it claims to possess, the repercussions would be severe, shaking confidence in the dollar and U.S. financial stability. This uncertainty could accelerate moves by other global powers, such as China and Russia, to further bolster their gold reserves, reducing reliance on the U.S. dollar as the world's primary reserve currency. We present the clips of Mario's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
We've seen over the last 3 years how foreign central banks have been buying loads of gold, record amounts of gold, since the beginning of the Bretton Woods, let's say, regime in 1944. It's been the biggest 3 years of net gold buying. So gold is still very important. Well, gold is money. And that's why this is so significant. And it goes to the heart of the gold manipulation, of which I've been talking about for years as well. I have a gold manipulation playlist if you want to look into it. I'm not going to go too much into it right now. I think the bullion banks are concerned because they probably know something that we don't about that gold in Fort Knox, that it might have been leased to the Bank of England, and the Bank of England might have leased it many times over. Is it any wonder a lot of gold is going from London to the US? But there's also gold going from elsewhere to the US. So maybe finally the US administration is realizing that gold is really important and it's been flowing east for too long and we need to repatriate it. And Yeah, so let's listen to President Trump here talk about Fort Knox, and I think it was last night. And it's quite amazing how X gets things out there, because last week it was Zero Hedge who tagged Elon Musk on one of the stories. Why aren't you? Why doesn't Doge look into Fort Knox, do an audit? And Elon Musk said, well, yeah, that's a good idea, but I thought they did that annually. I don't know if he was being sarcastic or if he's just doesn't know much about gold. But now word has gotten to President Trump. So listen to this.
We're going to go into Fort Knox to make sure the gold is there.
Are they going to?
You know that we're going to go into Fort Knox? Do you know about that?
And the reason I want you to listen to this is, yeah, because we're never too sure. People say, oh, they're going to audit Fort Knox. And people think, oh, they're like exaggerating. But it's for real. For those of you who are not aware of what's going on in terms of the squeeze in gold right now, well, the bullion banks, the central banks, the BIS, they use a lot of this gold to lease the physical gold, to lease it out many times over. It's just like a fractional reserve banking. If you put a paper dollar in your account, they will lend it as many times as they want. Usually it used to be 9 or 10 times. But since 2020, the Federal Reserve they abolished all reserve requirements. It's zero. I would venture to say that in London, where the London Bullion Market Association is based and the bullion banks operate from, there is no limit to how much paper gold or unallocated gold they can create from, let's say, a 400-ounce bar. It's infinite. But when you have the President of the United States saying he wants an audit of Fort Knox, and that gold might still be there, but if that gold has been leased out, rehypothecated many times over, that's a problem. How do you solve that? Well, you have to buy the lease back, you have to buy the gold back, and the thing is, if you lease it 100 times the gold that you have, it's going to drive the price massively higher. It's like a run on the bank. My speculation is that a lot of the gold, unfortunately, has gone offshore because in New York, the rehypothecation of the gold is not as extreme as in London. There's no limit in London. It's like the Wild West of bullion dealing.
Mario Innecco explains that the gold market functions under a system where bullion banks and central institutions use fractional reserve principles, enabling them to lease the same gold multiple times. This practice is particularly prevalent in London, where unregulated trading allows for virtually unlimited rehypothecation, meaning a single gold bar could have many claims against it. If a comprehensive audit were to reveal the full extent of this system, it could force the US to repurchase leased gold, which would likely trigger a sharp price surge. The broader issue, however, is that much of the physical gold may have already been moved offshore, leaving the US and other Western economies vulnerable. As confidence in paper gold contracts declines, the financial system could face major disruptions, accelerating the global shift toward physical gold reserves. Mario also points out that this situation could lead to financial instability beyond the gold market. A central bank's short squeeze on gold and waning faith in the dollar could hasten the transition to gold-backed alternatives, particularly in China. Investors and sovereign entities increasingly question the long-term value of paper claims versus physical assets. If major players begin demanding actual gold delivery, the implications for global markets would be far-reaching. Mario suggests that we might be witnessing a phase transition, a sudden and irreversible change in the global monetary system. If the US is securing physical gold instead of relying on financialized contracts, it could signal an acknowledgement that the current system is in decline. The long-standing mechanisms that have kept gold prices suppressed to support the dollar may finally unravel, potentially leading to a financial reset where gold is priced at its true value, free from manipulation.
Let's say you boil water, the water becomes gas, and the gas dissipates. That's the phase transition. And it creates a lot of energy as well because you input the energy. And I think the same thing is happening in gold. And the system that we're seeing being changed is this bullion bank paper fractional reserve system. And what's making it change is this fact that the United States wants to know where the gold is. The United States might be wanting to bring the physical gold back, and that disrupts the whole paper game in the LBMA. They won't be able to hypothecate anymore and control the price. They're not going to be able to create a infinite supply of paper gold, which keeps the price lower. And I said here in this chart, phase transition from paper to physical or real gold, question mark. I think that question mark could be removed very soon. And you can see how it shows up on the chart. It's really breaking out. So I think that line that we're breaking out and the other line that the price of gold was kept under since 2011, that was part of this system, LBMA paper system, and that's broken in my opinion. So it's interesting times. I think it was Lenin who said that sometimes it took decades for things to change, but then you get some weeks or months where decades or centuries happen, and I feel like we're in that kind of environment right now with the new administration.
As global de-dollarization gains momentum, central banks are rapidly stockpiling gold, signaling a potential shift toward asset-backed currencies that could challenge the dominance of fiat money. With rising geopolitical tensions and growing distrust in traditional financial mechanisms, speculation mounts that a new monetary framework centered on gold may emerge, forcing major economies to adapt rather than resist. This evolving landscape suggests that the long-standing suppression of gold's true value could unravel, potentially driving prices to unprecedented levels. If this transition materializes, it could mark one of modern history's most profound financial realignments, redefining economic sovereignty and reshaping the foundation of global trade and investment. That's it for today. Share your thoughts on Mario's analysis of gold revaluation in the comments section below. If you find this video informative, don't forget to support your finance log team and turn on notifications to stay informed about our latest videos. See you in the next video.